Welcome to the Monocle Banking Podcast, curated by Monocle Solutions in a week where a little-known Chinese AI startup has proven that innovation beats market control every day of the week. Well, speaking of control, it was often thought that if you control the money, you can control the world. It's an old saying, but in today's fast-evolving financial system, I think perhaps it's more fitting to say, if you control the payments, you control the economy. But better yet, if you democratize the payments, you free the economy and hopefully help bridge the banking divide that is still evident in South Africa. Well, the global payments industry is undergoing some seismic shifts, and today we're talking about payments. South Africa is obviously no exception. We're seeing major innovations in real-time payments, digital wallets, tokenization, mobile money, all of these disruptions that are reconfiguring the very infrastructure of how we transact. And at the center of the transformation is the newly launched Association for South African Payment Providers, ASAPP. Great name that, an industry body founded by 8 of the largest non-bank payment players, and their mission is to rewrite the rules of financial inclusion to ensure fair access to payment infrastructure. Well, that's what they say it is. Well, leading this charge, and we're going to find out more about it, is Marley, who's a towering figure in banking and fintech, whose leadership at Standard Bank and then Lesaka Technologies and now ASAPP is all about influencing the way we evolve payments. He's been doing it for the last quarter of a century. I don't want to make you feel old. Welcome. You're a Harvard Business School graduate. You're a mentor to young leaders. You're an author. You published your best-selling book, Blazing a Trail, Lessons in African Leadership. So I'm really thrilled to have you on the podcast. Let's start with leadership because, you've had an incredible career as I've just sketched out. What initially drew you into finance and payments? Was there a defining moment that sparked a passion for the space?
I think many times we don't realize that we benefit sometimes from the wisdom of others, or sometimes where people see something in you that you don't see for yourself, or that there are people who are senior than you who see your work and think that you might be suited to something else. So I stumbled on banking when I was recommended to Bob Tucker, who then was running the Banking Association of South Africa many, many years ago. And I started my journey into banking. And then I worked at the Standard Bank Group for 20 years. And then within that time, towards the tail end of that, one of my leaders, Peter Slebush, thought that I should move into card and payments, which I thought was one of the most technical environments in the bank. And why would I, being a bank generalist, move into that? And he said to me, this is the future. And that's when my journey with payments started. And then afterwards, I got a call from Ali Mazandarani, who asked me to move to a different organization outside banking. So sometimes it is an opportunity, or sometimes there are people who see something in you, or sometimes you stumble on an opportunity. What matters is what you do when you are in that opportunity.
Absolutely. But it also speaks to the importance of mentorship. We could probably have a whole podcast just on that topic in South Africa today. But, we need senior statesmen to play that mentorship role. Leadership is a recurring theme in your career, from Standard Bank to Lesaka, now ASAPP. But how has your leadership philosophy evolved over the years? What would you say are the principles that guide you in driving transformation in financial services?
The first thing for me is identifying the next generation of leaders and give them an opportunity to shine, because somebody gave me an opportunity to shine. So I'm obsessed about the next layer of leaders. The second one is the ability to work with others, that you don't have to be the brightest guy in the room. You always learn from others, and surrounding yourself with the best talent is the best thing. Some of the people who've been my critics through the years, they would say, that Lincoln is not good. He just surrounds himself with good people. I'm like, duh. That's the idea. Right. And thirdly, being mission driven and purpose driven is very important. And that it's not about the titles. It's not about the status. It's not about the money. It's not about any of these things. It's about the cause that you have. And then lastly, being a leader, you've always got to be competent and you've always got to be learning all the time. So lifelong learning is an important part of that journey. So through the years, I've evolved from a young leader to who I am today, but just sticking to those values and those principles, but always treating everybody with respect and dignity, regardless of where they come from. So that has helped me lead different teams and different organizations, or lead now a group of amazing entrepreneurs, amazing founders of companies, disruptors. You can only do that if you have the humility to learn and listen, and you've got the sensitivity to not always be the loudest voice in the room.
I think so many lessons in that. It sounds a lot easier said than done to ensure that you surround yourself with people who are often more competent, more skilled in particular areas than you as a leader. It means you've got to put your ego aside. And very often in industry, we see very big egos. And, looking at your CV, you've really been a student of lifelong learning through various local and global MBA programs and others, an old roadie and a award winner as well. I want to come to the heart of the conversation, though, and that really is this new chapter in payments innovation, ASAPP, which obviously has a connotation as soon as possible. We need to be shifting the landscape as quickly as we can. What was the key motivation for launching ASAPP, and what problem is it trying to advocate to solve for?
Yeah, I think if I look at all the leaders in those 8 organizations, they've been involved in different ways on focusing on financial inclusion, on disrupting the status quo, on trying to find different ways to challenge the status quo, the way things are done, and so on. But over a while, we all realized that we could do this differently. We could do this as a collective and try and find a cohesive voice to be able to bring these ideas across to the regulators and the policymakers. Now, the South African Reserve Bank had in its vision 2025 into 2030 a sense that you have to bring non-bank players into the payment space. Currently, you can really fully participate in the payment space only if you're sponsored by a bank. And that is very restrictive. We've seen in other markets in Southeast Asia, we've seen in India, we've seen in Brazil, where you open up, large volumes of transactions happen, low transaction volumes happen, and a bigger group participate in the economy. We felt that South Africa needs that. Secondly, we felt that the cost of transactions in South Africa remains very high. We have to find a way of dealing with wholesale costs in the economy. Thirdly, we felt that the competitive environment is still not good. It's geared towards protecting the incumbents rather than creating an enabling environment. So we knew we were competitors, but when we reached out to each other, we had this sense that although we're competitors, our true competition is inefficiency. Our true competition is lack of access. Our true competition is lack of inclusion in our payments ecosystem. So we were able to galvanize ourselves within really a period of 4 or 5 months as these CEOs of these organizations to say, guys, why don't we build this association as not just as an association, but an initiative for change? And so that we can engage with the South African Reserve Bank with a collective voice of the non-bankers, because there is a collective voice of banking organizations, which is BASA. They are also well organized within PASA. All of that is fine. But what is this non-banking voice in the payment environment? And that's what we were launching today.
And you really do have the who's who. You've got Matt Putman of Ikoka, you've got Katlego Mapai of Yoko, Peter Berry, Shop to Shop, Mpho Siddiqui, the Africa Group MD for Network International. Got Musa Mandra, who's the CEO of Hello Group. Rahul Jain, who's from Peach, and I think I've left one out, Johan Galatli, who's from Ultron FinTech, so, and including yourself. But if you look at that, I think let's understand the payment rails in South Africa in order to understand how we open up to non-bank players, because currently it's very regulated. You've got the SARB, it oversees the payments regulation. You've got PASA, that kind of manages industry participation in the national payment system, and then you've got Bank South Africa, which provides the plumbing, the clearing and settlement services. And as you say, currently only banks and a few licensed entities can have direct access to the payment rails. What are the key steps to opening payment rails to non-bank fintechs?
I think the Reserve Bank has put out a roadmap that we think as ASAPP were able to engage more directly. The first one is that they've signaled that they want to build a payments utility for the country. And the acquisition of BankServe is part of that journey. It's now within the Competitions Commission environment. We'll see how that goes. We certainly would want a voice in the governance of that entity when it's all said and done to make sure, again, that non-banks have a role to play. Secondly, they've defined that what is PASA today might become PIB, a payment industry body, which will be more inclusive of players beyond banks. We want to have a say as well in that as to how do we create the governance structure, who decides on the board, who decides on the remuneration of the executives, and what's the agenda. We are part of that conversation. But most importantly, they've defined the payments environment and the regulator environment as going to be fundamentally different from what you have now. What you have now is that in order for you to participate in the settlement and clearing, you have to do it within the current rules. What they've defined is a longer term route and a short term route. The longer term route is the changing of the Banks Act, National Payment Systems Act. All of those will be put to Parliament and that process will go its way. We don't have a timeline for that. But they have given us some exciting news today that they are contemplating making some amendments or giving some exemptions in the current Banks Act to regulate parties on the basis of activity. So if you are doing activities that are outside of strictly banking, you should be regulated in with a proportionate regulatory environment that allows non-bankers to play in that space without needing a bank. Today, you don't have that option. So what we want is to be able to influence what those regulations look like, what that exemption would look like, so that it's not an exemption that says you can do this without a bank, but in reality, it's so prohibitive. The regulations are so onerous that you might as well stick with the bank that you've got now as a sponsor. So that is something that they've announced today. We are quite excited by it because it clears a path that says a non-bank participant can settle and clear without needing a bank. That's the fundamental principle. The detail, obviously, will give us more color as to what regulatory framework will be put for those non-bank players to put that. The last thing I'll say is that sometimes the conversation becomes polarized in the sense that people juxtapose access with stability and risk.
Yes.
These 8 players, if anybody looks at their history, their track record, these are serious organizations. These are serious organizations who want to participate and take on the responsibilities and risks associated with participation. So to say that, oh, if you give access, therefore, we are as interested in risk as everybody. We are interested in customer protection as anybody. We are interested. I mean, some of these companies are listed entities. So we want a regulatory environment that enables this. If I give 2 examples of changing a regulatory environment to allow non-bankers to come in, if you look at Ghana, in Ghana, they were able to enable telcos to be able to participate to a point where mobile money, there are more mobile money accounts than there are bank accounts in Ghana, right? So that's how you open up in that context of Ghana.
Yeah.
In the context of Kenya, it was how they enabled M-Pesa to be able to participate. And now very little happens there without M-Pesa in that economy and other economies around there. So what it will be like for South Africa, it is creating that regulatory framework, regulating according to activity, exempting us from the Banks Act as long as we're not doing things that really should be in banking. And anybody who wants to do what is strictly banking must be regulated as a bank. Others who are doing payments must be regulated as payments entities and things of that sort.
And you would still accept, I'm sure, that you've got to comply with kind of anti-money laundering and FICA stuff, kind of KYC
Absolutely.
regulations, so you ensure that secure and traceable transactions are available and that kind of thing.
Absolutely. Absolutely. If I just give my own organization, we currently deal with all of those things. Whilst we are being sponsored, the sponsor bank is ultimately responsible to the Reserve Bank, but the actual monitoring and everything is done by us as an organization. So it's not as if those responsibilities go away. What it now means is that a non-bank participation takes direct control of those who is accountable for that. We know that, for example, there must be some capital requirements for participating in the payment system. We accept that. What that number will be is what will determine whether it's prohibitive or it makes sense. Two, we accept that if you're going to accept payments, there has to be some liquidity requirements, right? We accept that. Thirdly, in order to participate in the system, you've got to have some ways of protecting the system from cyber attack and those things. Four, we also require, I'm sure, some due diligence on the leaders of organizations in order to participate in the payment system. So we think that all of these are fairly well accepted norms that would enable us to participate. The devil is in the detail. If the focus is on protecting the status quo, we will not advance, because all that will happen is that you will be asking these entities to become mini banks. Then you've lost the plot. What you want is allow these entities to be innovative, to be disruptors, to be all of those things, and then put these obligations that are sensible, make sense, are protecting the customer, protecting society, protecting the organization and the payment system. I think that those will be eminently reasonable. That's why we're not interested in having 50 members. We are interested in saying, let's get the bulk of the key members that really have skin in the game, that want to participate as adults in the room.
And I mean, if you look at the adoption of open banking APIs, like in the EU's PSD2 framework, that would allow fintechs to access user accounts securely without full banking licenses. And it's that kind of thing that will ultimately allow fintechs to deliver value. Because let's just, if we zoom out a little bit, Lincoln, you had Tim Marcelo, who was present at your launch today, who's also someone who's steeped in payments. He's a regulator who understands all of this. I mean, I've had him on the podcast with their report that they released last year, and he understands the challenge in South Africa is to help transition away from cash and to build financial inclusion. And we've been talking about it for a long time. If you look at McKinsey, it says cash may still be king, but its reign is coming to an end. And I've listened to this over and over and over, yet our penetration rates are still woefully low and not where they should be. How do we get users, get small businesses in townships to transition away from cash, to enjoy the security and the friction benefits that brings?
So we go back to our name, ASAPP. So we want these things done ASAP because, as you correctly point out, some of these conversations have been going on for 10, 15 years. We've got to make some decisions. We've got to be able, for an example, we've put a view across to say wholesale costs are prohibitively high for small businesses. We've said that we have to lower the cost of transactions. We've said to the Reserve Bank, let's review interchange. So these are direct proposals that we are making and we are going to continue to make. And it's up to the regulators and other players to assess our propositions. We are also not just saying these things for the sake of saying them. We are looking at other jurisdictions and say, look at the interchange in this jurisdiction and that other one and compare it with us, right? Secondly, we are saying that what are we doing to invest in the infrastructure that's there for payments to enable the smallest player to be able to accept any form payment, whether it's a QR code, whether it's a card, whether it's mobile money. People must have the right to accept any payments, but also the consumer must have the ability to pay in any form. If I give you just two examples, if you pay somebody, because we say we've got a large banked population now, almost everybody's got a card, everybody's got a bank account, maybe 90%. But as soon as the money hits their account, the money is withdrawn into cash because people know in order for them to do the things that they need to do, they will have to use cash because they are not going to be able to use that cash to pay at the tavern, to pay at the taxi, to pay at the church, to pay all of these things that are part of their lives. We're saying we're going to focus on those things. Or you look at an entrepreneur. How long does it take for them to get settled? If it takes 3-4 days, I mean, cash flow is everything in a small business. So we want rapid payments. We want this thing of instant settlement. These are principles we are pushing for them to be adopted. So in a way, we are not disagreeing on the principles. I think Tim even today reinforced the same principles we outlined. What we were saying to Tim, and Tim was also agreeing with us, and also Pradeep was there. So both Tim and Pradeep being there meant a lot, that the most senior people in the Reserve Bank were there, who are responsible for both payment stability and the modernization of payment. They are agreeing with us. We now saying, let's get to work to get these proposals in there. And these CEOs have committed to give so much of their time to make this thing work. We are obsessively focused on getting this done, not only for our commercial interests, but for a larger societal purpose.
Lincoln, I've got to ask you, when you talk about real-time payments in Brazil, PIX gained 150 million users in a couple of years because it was free. In South Africa, PaySharp transactions cost up to 50 Rand at some banks. Do you think real-time payments should be free for a period, maybe, just to drive adoption, because only 3% of South Africans regularly use PaySharp?
So again, if you think of the construct of PaySharp, the construct of PaySharp at the moment is only banks, and banks who already have products that are linked to that. So when they are thinking of pricing, the pricing is within the context of their existing products. If you opened up the PayShap environment to allow other players to come in, the competition will drive the price. Because why should I pay 20 rands to send this money? If somebody can come in and say, I'll show you, you can pay 2 rands or pay 1 rand or pay nothing. That's what the competition is about. So what the regulator has said openly is that they are going to drive the cost of that down, because they will own those rails of the rapid payments, and therefore say to the public, using their might of the marketing that they have, to say, to pay through this is going to be cheaper. So a customer doesn't then have to go and pay the 50 rands when they know using this. For example, how big has been the marketing on PayShap?
Yeah.
Right? Who are the participants? Are the participants geared towards making it work? And so if they're not, because they've got other competing products, and I'm not knocking them, I'm just saying here's the reality. They've got these other products. But if you bring in players who see this as an opportunity, the volumes will go up. And this is the message I'm trying to drive. What you've just said about Brazil is so spot on. Both Brazil and India and other markets have shown that when you do this, the volumes rocket up, because now you have more people participating in payments. Wouldn't that be so great for a country like ours, where we have this artificial divide of informal versus formal? But here are some practical realities. If SAB is bringing liquor into the taverns, they need to be paid, right? Those taverns need to be able to access the stock in order to sell to their patrons. Imagine if that whole chain was digitally enabled, which means that the SAB can get their payment immediately for the stock. The guys who have now done this, they are able to get the money from the people who've paid and all cleared in real time. And the consumer is able to pay in whatever form at the tavern. Suddenly, we have enabled the economy to move faster just in one little vertical.
Yeah.
You can use that in bread, you can use that to cigarette, you can use that in somebody going to a spaza who can pay, with a card. And the spaza owner can think there's a benefit for me of this person paying in a card, and I'll be settled immediately. So there's choice for the end consumer, there's choice for the merchant. So these are the things that we are agitating for.
Yeah, and you start to build for a small business from a thin file to a thick file profile in that business.
Absolutely.
To extend more credit,
Absolutely.
more financial services that help grow that business and grow the South African economy. I think it's absolutely critical. Just lastly, if you had to make a bold prediction, Where will South Africa's payments ecosystem be 5 years from now?
It will be very different from what we have today. You will have a very dynamic and very competitive landscape where both traditional players, some of them partnering with fintechs and others competing still for their piece of the market share, with on this side, fintechs and other non-bank payers becoming bigger and others consolidating, buying others, and it'll be a competitive environment. If I could just give you two examples. If I look at Brazil, 10 years ago, there would have been no payment player in the top 50 by market share. 10 years on, you now see all those players there. Same in Egypt, same in Nigeria and others. Once the competitive landscape is opened up, you will see these players, these 8 players and other players coming in and taking advantage. And incumbents will have to fight to protect those market shares, protect those transactions from going to other players, but they should do that through a competitive environment.
Absolutely.
So 10 years' time, I think that there will be space for the right players in payments who are prepared to invest in payments. And I think you'll start to see more form factor payments rather than cash being used. Cash will still have its part, as you were saying earlier. It is the king, but it doesn't have to be a tyrant. We've got to be able to have other form factors of payments coming in.
We've covered a lot today, from the rise of real-time payments to the role of ASAPP, this newly formed industry organization speaking for the non-bank players in payments, the challenges of transitioning away from cash, and importantly, the innovations that are going to shape South Africa's financial future. A huge thank you to Lincoln Marley for joining us today. Lincoln, where can people follow your work and ASAPP's latest developments?
Well, there's a big social media effort by the team. ASAPP has got now its own website. It's built its own social media profile. And also the organizations, the founding organizations are also posting a lot about ASAPP on their own social media. So there's a lot that will be heard about ASAPP in the next few days. But then the real work starts. And the real work is in the engagements with the regulator, the engagements with, PASA and other players on the changes that we want to happen.
ASAPP, absolutely. We need to see those regulatory changes, reforms to the NPS Act, all of that very, very key. Well, thank you again to Lincoln Marley and to our listeners for tuning in. If you enjoyed this conversation, don't forget to subscribe to the Monocle Banking Podcast for more insights into the future of finance. Until next time, keep questioning, keep innovating, and keep pushing the boundaries of what's possible, like an AI startup out of Beijing. Take care.